Hello, everybody. It is now 11:30 in the morning, so we're going to go ahead and get started right on time. Thank you all for joining us. Good morning. My name is Mark Perez. I am a principal here at the Bonadio Group, specifically within our Buffalo office. Allow me to be the first to say for the next season, go Bills. So first one to say it. Very happy for that. Thank you for joining us for our annual tax-exempt webinar series. In this particular session, we will be discussing the Uniform Guidance and Single Audit Update. Just a few housekeeping matters before we get started. Keep in mind that this presentation, the materials and links to webinar replays will be sent to you via email within 2 weeks after this session concludes. If you haven't registered for the remaining sessions yet within our tax-exempt webinar series, there's still time. Simply visit bonadio.com and search for tax-exempt webinar series to sign up. There are a lot of various good topics offered and a wide array to choose from. So we're very excited about this. Also, the link for the series will be placed within the chat by our production assistant here. So just a few more housekeeping items before we get into the real content. So please make sure that you can see the content. Be sure your speakers and earphones are on. To adjust your audio, there's some screen captures here to direct you. Simply click More, choose Settings, then Device Settings, and use the drop-down menus to make any changes necessary. If you have any questions or comments, feel free to use the chat option. For those of us that are looking to gain CPE credit from this session, there is a Conferences I/O window at the top of the Teams webinar window. So you're looking for this kind of bar graph looking icon within a chat bubble here, Conferences. Simply click on the Conferences I/O button. If the button is not available, I find leaving the session and come back will cause it to appear. Or you can go to bonadio.cnf.io in a web browser and click on today's session. Simply answer the poll questions in that browser window as they come up. Spoiler alert, folks, we will have 4 poll questions that will need to be answered today in this 1-hour session. Simply click complete the check-in form, and when a poll is opened, it will be displayed automatically on your screen. Click on the circle button next to the answer of your choice and then click Submit. We'll discuss the poll results as we go through this. And at the conclusion of this session, please do not forget to check out once you leave or if you leave early. So simply you click on that same Conferences I/O button and click the checkout process. Keep in mind that this presentation is intended for educational/informational purposes only. It does not replace specific independent professional advice. This presentation is based on our current interpretation of the law, which of course could change as the laws change and new guidance is released by authorities. Statements and opinions expressed are those of the presenters or participants, and unless expressly stated to the contrary, are not the opinion or position of Bonadio and Company. Bonadio assumes no responsibility for the content, accuracy, or completeness of the information presented. Attendees should note that sessions may be audio recorded and released in other media without notice. So just a quick introduction. As I already introduced myself, my name is Mark Perez, a principal in the Buffalo office. A little bit of a background. I have been with Bonadio for about 6 years at this point, after serving as a manager with another regional firm for several years. I also, within my capacity, serve as the single audit product owner within Bonadio. And what that means is as your engagement teams are performing their compliance testing, if they have any questions, concerns, or anything they need help with, I sort of serve as a resource help desk option for them to consult for any challenges that arise within their engagements. Joining me also is Karen, who you see here. Karen, I'll let you introduce yourself if you want to just chime in for a quick moment.
Great. Thanks, Mark. Good morning, everyone. My name is Karen Lynch. I'm a partner here out of the Rochester office. I have been with Bonadio now for over 20 years, so pretty big accomplishment. Very happy to have been here my whole career. My primary engagements are almost solely single audits and audits that include a single audit engagement. So lots of years of experience, seeing all sorts of variations of this uniform guidance get changed over the past 20 years. So again, we're here to help present the newest rendition and hopefully answer some questions and provide some clarification to you all as you go into your fiscal 2024 and on audits.
Thank you, Carrie. So real quick, visiting our learning objectives for this for the day. The main objective is to go over the recent uniform guidance standards that updates that have come out this past fall. So the main objectives are to understand the effective date, to identify the key provisions of the uniform guidance, providing some guidance on implementing those changes for your organizations, and providing some resources to support you as you go through this transition process. So to start off, we'll go with our first poll question. How familiar are you with the new 2024 uniform guidance revisions? So once again, if you go to conferences.io, see it, am I doing this properly? Is this timing and launching for everybody?
Yes, although you did stop sharing your screen. So if you could reshare, I believe attendees, when you submit your responses, please be careful not to click share up at the top because that will take away from Mark presenting. Thank you.
So once again, how familiar are you with the new 2024 uniform guidance revisions? A lot, a little, there are new regulations. I will say that these are exciting times for somebody that serves clients within the realm of federal compliance. I began my career in public accounting back in 2009. So I've been doing this for a while. Back then, it was the federal compliance was determined through a various collection of circulars, and the one applicable to single audits was A133. So way back in the day, in my time, I know the threshold, which we'll get to later on, was $500,000. And then in December 2014, the uniform guidance came out to update all that. Suddenly, all those circulars were compressed to one called the uniform guidance, or as we used to call it, the super circular. And those thresholds increased to about $750,000. So those were exciting times to go through that when the last big revisions came out. And now we're seeing another significant revision. So these are exciting times. Ian, has the poll question timed out, or how do I display the results?
It will be on your screen. Attendees are able to see the results if they responded. So you're set to move on. It'll be open for another 2 minutes.
Oh, okay. Well, we'll go ahead and move on while we wait for the poll question to time out. So on this slide, various terminology and abbreviations that are good to know. We're not going to talk about every one of them, but there are a select few. I do want to highlight and provide some background for your own informational purposes. The second one here, you can see listed ALN, Assistance Listing Number. So like me, if you've been doing this for a while, you're used to working with these federal programs, and they're assigned what I would call a program number. They all have the format of 2 digits, a period, and then 3 digits. They used to be called CFDA numbers, which stood for Catalog of Federal Domestic Assistance. But recently that has been changed to the ALN that you see here, Assistant Listing Number. I share this whole terminology with you just so in case some of you may be funded through governmental entities or there may be agreements that still use previous language. That way, if you encounter this terminology, you know what the funding sources are referring to accordingly. So the assistance listing number, you can think of that as the specific program number. CFR, the Code of Federal Regulations. As your auditors prepare the single audit and issue the deliverables, if you sit down and you read the opinion deliverables, it says that the CFA, the Schedule of Expenditures of Federal Awards, jumping ahead here a little bit, are required to be presented in accordance with Title II U.S. Code of Federal Regulations, CFR, Part 200. So CFR is a good terminology to be aware of. Federal Audit Clearinghouse, FAC. So once your auditor prepares and issues the single audit, the process isn't done yet. Keep in mind that you'll still need, or your auditor will need to go onto the Federal Audit Clearinghouse and key in the results into the federal website, which you will need to go in and certify and submit. That's what sends the data for your single audit to Washington, and thus is the completion of the engagement. Keep in mind, from the federal point of view, if this last step of submitting the single audit through the Federal Audit Clearinghouse is not completed, for their intents and purposes, you didn't have a single audit completed. So be aware of that towards the end of the engagement. QC, relying on question costs, particularly any issues or findings that the auditors may identify. The CFO, which I already mentioned, the schedule of expenditures of federal awards, that's the listing for each dollar of federal expenditure spent by an entity within its reporting period. UEI is a good one to know. Under the old Federal Audit Clearinghouse, they used to have the old DUNS number in addition to the EIN, and it's an identifier that was sort of optional. But under the new Federal Audit Clearinghouse, all organizations need to have this unique entity identifier. It's a 16-digit number that is issued to you by the website sam.gov. So if you've ever had a single audit done before, or you're registered with sam.gov, you have already automatically been issued that UEI. If you don't have it, simply go to that website and register. It is a requirement to be able to even submit the single audit into the Federal Audit Clearinghouse. And of course, UG is uniform guidance. So to start us off in our first section, uniform guidance revisions overview, I'm going to let Karen discuss the next couple of slides with you.
Great, thanks, Mark. I will do a little recap here too before I get started on the results of our poll. So 13% said they have a lot of familiarity, and the majority, though, is a little familiarity. So then there's some that say that they aren't even aware there's new regulations. So it sounds like everyone will stand to gain something out of this presentation. And as Mark has said, if you do have any questions throughout the presentation, please don't hesitate to put them in the chat. Mark and I are monitoring that, so we would love to be able to stop and kind of answer questions in the moment as opposed to waiting to the end. I think it sometimes gets confusing. So starting out here, the final published version of these uniform guidance changes came out just in April of 2024, so we're not even a year in. But the important thing to note is that the final guidance is applicable starting October 1st of 2024. So a lot of organizations are thinking that this goes into effect for your 2024 audit. That is not the case. So you can see that bullet here at the bottom of the slide is that the effective date for the changes are for fiscal years beginning on or after October 1st, 2024. So this will not change the reporting or our thresholds for your 2024 audits. It will most likely be starting for most of the organizations in 2025. So there's a lot of changes that also need to happen behind the scenes. So that's why this is delayed out till 2025. But we want everybody to kind of start thinking about what the changes are and things that maybe you need to do before you're subject to the audit under these new regulations. So if we turn to look at what the heck the point of doing this was, as Mark had said at the beginning, this has happened multiple times. So there's always changes happening in every few years. It kind of gets scrutinized and then looked at in a more thorough detail. There's a significant amount of questions and comments that are required and requested throughout the process. So this isn't something necessarily that the Office of Management and Budget just goes ahead and does. There's quite a bit of comment that they take into consideration. And if you ever want to kind of see what those questions were, there's a link right here to the AICPA GAQC letter. It's several pages long. It's broken down by the various sections within uniform guidance and considerations that the OMB did take into account. The ultimate goal, though, was to kind of make some consistency across the statutory requirements and administrative priorities, with the objective as well to reduce the agency and your recipient burden. So a lot of these grants all have different requirements. They have different reporting, different application processes. So ultimately, the goal was to start kind of streamlining and getting things a little bit more consistent across the various agencies. And then there were a lot of sections where language wasn't necessarily being used consistently. Again, lots of consistency. You'll hear that word a lot today throughout the various different compliance programs in their requirements. So terminology may have been used one way under the Department of Health and Human Services, and then a similar grant maybe through the Department of Agriculture didn't necessarily use the same terminology, but kind of referenced it. So there was a lot of reading that went through to make sure that language was presented the same way with the same meaning. And so that was, again, what the additional plain language improving flow and addressing inconsistencies. So there's a significant amount of changes that were proposed, and these are what we're going to discuss in more detail. So the next slide is the big thing that everybody hopefully is excited about, which is, as Mark said, raising the single audit threshold. So this is exciting. It's saying that now when you look at all of the federal awards that you receive, the threshold is now increased from $750 to $1 million. This is, again, a big conversation as you start looking at your federal funding after October 1st, 2024, that you'll want to kind of ensure where is your threshold? Where are you at? Because if you're one of those organizations that maybe over the past few years had received a significant amount of ARPA funding, the COVID funding, you may or may not be getting up to that $1 million threshold as some of that funding is starting to trickle off. You'll definitely want to look at that and make sure you're having conversations to determine if you are going to be susceptible to the single audit requirement going forward. Question costs, again, as Mark mentioned, QC is what the kind of shorthand term for this is. And those were findings that we had reported as auditors in the past related to compliance. Those have been clarified. And then the other big change here is this de minimis cost rate. So you'll recall, again, as Mark mentioned, back in 2014, when there were the last round of significant changes, this de minimis cost rate came into play and is one of the footnotes, whether you apply it or you don't, it's elective. But the rate has now gone up to 15% from the 10%. And again, this is an election you can make. It's up to 15%. You're not required to do 15%. You can still choose a different rate or no rate at all. So, but if you are one of those organizations that does like to take advantage of it to cover some administrative indirect costs, you could now increase that up to 15%. And then looking at some terms, again, clarifying between what a recipient or a subrecipient, they used to be called a non-federal entity. That was a little confusing, and now specifically refers to the applicable entity, whether you're the recipient or the subrecipient, subject to the various requirements within the uniform guidance. You'll see this a couple times throughout the presentation. We say here supplies increase the threshold. Later on, we'll also comment that this does also include equipment. So there's sometimes confusion between what's equipment, what's supplies. The threshold has now increased for both of those from 5,000 to 10,000, and then the requirement to remit unused supplies. So that's a little bit more reasonable with inflation. Having those thresholds increase, the 5,000 was kind of becoming burdensome to evaluate what is considered unused supplies. And then this last one, this plain language, this was attempted in 2014 as well to kind of standardize grant awards, making sure that the language and announcements are very clear and concise. It sounds like there still is some work to be done here. So again, it's supposed to be a little bit clearer for specifically agencies and organizations that maybe are less sophisticated into grant applications, trying to make it a little bit more user-friendly for individuals to actually apply and seek out opportunities to get some federal granting. And then there was also the request to provide additional clarification relating continuing compliance for loan and loan guarantee programs. So I know I personally had a client that had received a Department of Agriculture grant for renovation and purchase of a building as a loan where, you know, they had to stay in the building for 25, 30 years and maintain it in accordance with the grant agreement. Well, we audited the year that they received the funds as it was over 750, but there was at that time no requirement to continue auditing for compliance. But then in 2021, it came back and they said, no, you do have to continue auditing it, similar to a HUD arrangement. So things like that were kind of buried in the language. They weren't clear in the uniform guidance, the requirement for not only the organization, but us as auditors to ensure that we're making, ensuring your compliance with these funds that you had received. So things like that have been required to be clearer in the actual documentation.
If I
So
could just
with,
go ahead, if I could
yeah,
just go ahead and bring it back down to the basics, specifically with the first bullet point there. When we talk about the threshold going from $750,000 to $1 million to determine if you need to have a single audit, what we're referring to, for those of you that are new to the world of federal compliance, is building your CFA, your schedule of expenditures of federal awards. Look at the federal dollars that you spent within the reporting period through your organization and compile the list of the programs, the amount spent, and the ALN, those program numbers we talked about. If the grand total is at or above, according to these changes, at or above $1 million, you would need to have, of course, the single audit piece of your audit engagement. Now, this first bullet point about recipients and subrecipients, I've seen that this has added some kind of confusion. So you could have federal dollars that don't directly come from Washington. They could be passed to you, for example, through another non-federal entity like New York State or perhaps your county government. And for those that are new to, federal compliance, I found that there's a temptation to say, okay, I got this grant program with this federal with these funds that I've spent during the year. It's not federal because it came from New York State. Well, you have to look at the source of the funds. If New York State got those funds from the federal level and then simply passed them through to you, they still count as federal funds and would need to go on your CFA and count towards your approach towards that threshold. So just wanted to add some clarification to keep that in mind as you go through this process. One way to determine this, talk to your funding source. Go back through your funding agreements. If you're looking at your funding agreement and you see that program number, that ALN, that's a sign that, perhaps there's some federal dollars involved here. Open the communication, have the conversation, and ask the questions of your funding source to determine if these are in fact federal dollars that need to be reported on the CFA.
that's a great point, Mark. And with that, we're going to actually launch poll number 2, which is, what is the new threshold for single audits under the 2024 uniform guidance? 750, a million, or 1.5 million? And again, you'll click on that conferences IO and select your option, and then make sure you hit submit when you have entered that. So with that, we'll keep going. I'll turn it over to Mark.
I know these are really tough poll questions. We really pulled out some busters here. So keep in mind, there's no, if you, as long as you answer the poll question, you'll still get credit. So don't feel bad if you get it wrong, but go ahead and submit and get that CPE. So just want to talk to you a little bit about the effective date. I know Karen briefly touched on this during her slides, but it is important enough worth to revisit. Keep in mind that federal agencies could apply the new guidance prior to October 1st, 2024, but they're not required to do so. Also keep in mind that if they do that, federal agencies could not apply the new changes prior to June 21st, 2024. So as Karen mentioned earlier, the effective date of the 2024 Uniform Guidance revisions are effective for awards issued on or after October 1st, 2024. Basically, what this comes down to is, in other words, for fiscal year ends September 30th, 2025 and later, will be the first to implement these 2024 changes. So if you're thinking of this in terms of your financial reporting period, a lot of you, of course, are probably 12/31 year ends. I think that's a good guide to take away there, that the rule of thumb is for fiscal year ends 9/30/25 and later. So these next few slides are kind of clip and paste from presentations that the GAQC has put out in regards to provide guidance on this transition and help educate the industry on what this all entails. And I think they're worth revisiting. So kind of a frequently asked question format, can we adopt the new standard threshold for our I know this is written from the auditor point of view, but it's still worthwhile for our client base for their June 30th, 2024 audits. No, you can't adopt until for years ending 9/30/2025, as I just mentioned, or later. Should you adopt the new $1 million Type A program threshold for June 30th, 2024 audits? Again, no. The magic date here as far as fiscal period year ends are 9/30/2025. So you kind of see a bit of a pattern here in the responses. How will we deal with the testing and compliance when some awards will be subject to uniform guidance and some are new? It'll need to be determined on the uniform guidance criteria relevant to each individual award. We expect that the compliance supplement for 2025 will address these kinds of questions in greater detail when it's released, in specific with Part 3. The general observation I've made in recent years is that each annual version of the compliance supplement tends to come out around May each year. So I have not heard that this year would be any different as far as time frame. And how can you determine if an award is subject to the current or the new uniform guidance standards? The main thing is it's based on the date and also look at the terms and conditions. So as I was saying earlier, revisit that language in your award agreements. And I'm going to expand that further by having an open, honest conversation with your funding source. So just a few items here. What about subawards? So an instance where you receive federal funding from another non-federal entity. For example, if New York State got the federal money and passed it on to you, what about situations like that? It's dependent on what it follows the guidance of the subaward from the source that the funding came from. So again, you'd have to have a conversation with the funding source and look at ask them regarding the terms and the timeline related to their agreement, their funding award directly with the federal level. The new rule says that some agencies can adopt the new uniform guidance awards as early as June 2024. The response to this is a little dated. When GAQC was presenting these slides, this was back around July, August, this past summer. It says that they'd only heard from 3 federal agencies that have requested to early implement from OMB. At this point, of course, there are further more agencies that have adopted this, but there are more federal agencies that are still reviewing, a few remaining that are still in the reviewing process at this stage. Again, there seem to be a lot of transitional issues. Will OMB be issuing guidance? Yes, they're currently releasing data. I mean, at the start of this presentation, I mentioned that our points are based on the current interpretation of the standards, and they can change. So I think a lot of lingering remaining questions will be answered when the new version of the compliance supplement will hopefully be coming out in May of 2025. So I will give this back to Karen to take you through some of the auditee changes from the client side of the table in this process.
Great. Thanks so much, Mark. So the next few slides will go through some of the bigger definition changes. As I had mentioned, similar to supplies, equipment also had an increase, and this is related to the capitalization threshold. They typically were recommending 5,000. That's up to 10,000. I will caution that if you have cost reporting and other things that influence rates, please make sure that while you have the opportunity to go up to 10,000, you have a conversation within internally management, making sure that a capitalization threshold is the most beneficial for your organization. So just sharing this as an opportunity, and for some organizations that don't have rate setting measures to be concerned with, this might be a nice opportunity. And then modified total direct costs. These specifically referred to the amount that you could apply like that de minimis cost rate to. So modified total direct costs specifically are dealing with your salaries or wages, fringe, travel, materials, services, all of those things that are directly related to the grant and budgeted for. And then you would apply your indirect cost rate to the total of those. So initially you were capped at applying it at a $25,000 threshold. That threshold has now been increased up to $50,000. So some nice benefit there to gain some additional indirect cost reimbursement under the grant dollars. And then moving on, when you look at question costs, again, Mark had kind of alluded to some additional clarification of the language in the consistent application by auditors. So the big thing here was, if you keep reading down, there's talking about the combination of known and likely question costs. And the big thing here is there was going to be a significant change, but the agreement, or I'm sorry, the language in the in the compliance supplement is in agreement with the AICPA language for us as auditors when we are making a final determination of if there are question costs. So what this means is, as we're performing our audit procedures and we feel that there's costs that may have been charged to a grant inappropriately or put through as a voucher for reimbursement, we find that they aren't in agreement with the grant terms. So I had one recently where grant terms allowed them to be reimbursed for several services. However, transportation, for example, was not included. However, the grantor had included that in their voucher for reimbursement. That would be considered a question cost from our perspective, as the grant document had specifically excluded transportation costs for reimbursement, but the client had put it through. So again, we have to be able to understand the known question cost, and then reporting is based on the combination of that known and likely against the $25,000 threshold. That threshold did not change. You can do, it's still 25,000. They did discuss it. They kind of went through it in detail, but the final determination was that it's still going to stay at $25,000. The big thing too is proper perspective must be provided. So when we're providing the finding documentation and listing that out in your official single audit report under finding and schedule of question costs, we need to make sure that we're providing a perspective and we're providing enough language to be able for the reader to understand how we came to this conclusion and determination of the potential question costs. And then again, the question costs are not considered improper payments until reviewed and determined to be improper. So we're just reporting that this is what we believe is the situation. However, it's then up to that agency or your funder to make that final determination in what may happen post our report of your single audit report. And then mandatory disclosures related to and again, 2014, when the language changed. There was a specific change relating, next slide, please, relating to reporting fraud, bribery, gratuity violations. This was a big change that came out in 2014. And it's in our engagement letters, it's in your audit opinions, it's constantly being discussed. But this is a big change. Now the requirement is that the recipient or subrecipient, so that would be you all or whoever the funding is possibly passed through to, must disclose when it has credible evidence. So again, legal terminology here, saying that it's worthy of belief and it's trustworthy evidence. So if you believe that there, as a recipient or a subrecipient, have had a violation of a federal criminal law involving fraud, conflict of interest, bribery, gratuity violations, anything that falls under the False Claim Act, you as the recipient, one way or the other, are required to promptly report through written disclosure, not only to the funder, but to the Office of the Inspector General and potentially whoever the pass-through entity is that you receive the funding through. So it says promptly, again, it's supposed to be providing additional opportunity for preliminary evaluation or examination of how and why you believe this act has occurred, but it is on the agency organization to report it in writing to the various funders as explained.
So it's quite a bit of a broader scope in that definition. It's not that you've seen that there is a violation, but that there's credible evidence. So the bar has been raised in that regard.
So then moving on to auditee changes, lots of changes in focus related to internal controls. So as Mark had kind of reiterated back on the replacement of non-federal entity, more clearly stating the recipient and the subrecipient. So as we said, you might be the subrecipient because the federal dollars came from the federal agency to New York State and then to your organization. That actually makes you a subrecipient, as opposed to the dollars that maybe go right from the federal government directly to your organization. That would make you just the recipient. So when you're looking, if you ever have, time to go through and read the compliance supplement, I'm sure you don't, but if you did, you would see that the language very specifically will call out some of the specific compliance requirements depending on quote unquote the tier that your funding is received from. So it does say, though, that both the recipient and subrecipient must document and maintain effective internal controls so that you can manage the federal award in a compliance with federal statutes regulations. The third bullet here is where I really want to bring your attention to, as there now are numerous references within the guidance to reasonable cybersecurity and other measures to safeguard information, including PII and other types of information. This is a significant change as all of us have hopefully moved on to everything being digital, documents being stored up in the cloud. I work on several institutions of higher education, and this is actually a specific compliance requirement related to the Gramm-Leach-Bliley Act that we are required to look at how those educational institutions are specifically protecting student data and information. This is requiring consideration with the NIST framework. So these are all things you can look up, but it's the National Institute that provides a framework for you to go through. And again, looking at an annual risk assessment to ensure that you have proper safeguards and other measures in place so that your controls electronically are being protected to the best of your ability with the financial budget that you have. So something to think about, look at. We are anticipating this may come through in consideration as auditors when we're looking at your internal controls over compliance. There may be requirements to inquire about your cybersecurity internal controls relating to the data and access. Another big change is related to procurement. You'll recall there's always been in there the preferential reference to small businesses, minority and women businesses. There's now also added in veteran-owned businesses. So that's just an additional consideration when you are looking at who you're going to select to do business with as part of your federal dollars. And then again, there's affirmative step must be taken to contract with these types of businesses. So making sure that you're evaluating if you have one of these businesses available and if they would be the best fit for you in determining why you may or may not have selected them at the end of your decision-making process when you're going out and soliciting either bids for services or goods, any of those sorts of things that you make sure you consider those options. And then there was some confusion here relating to change of small purchases or micro purchases. They've changed the terminology now to just be simplified acquisition. So these are those smaller dollar purchases where you're not going out and getting bids or obtaining multiple quotes, but just making sure that you still understand you're responsible to provide documentation for the selection of those simplified acquisition purchases. And then removing restrictions related to geographic preferences. Again, I wasn't going to get too much into that. And then prioritizing environmentally sustainable products and services. So again, as Mark alluded, there's obviously changes within administration. So a lot of these things also are subject to changes as this is evaluated throughout the year and by the time the compliance supplement comes out. And then the next deal comes with some more changes. The supplies we've already talked about, increasing that threshold. But the fixed amount awards on the next slide, Mark, talks about those performance-based grants. Awards that are given out at a specific dollar amount, and you may have a fixed obligation grant, you have actually special benchmarks or milestones that you're required to meet. So those grants were previously limited at $250,000. They've now been increased up to $500,000. So if you are an organization that does receive those, there is now an opportunity to receive more funding for those grant products that you may have been received prior. And then indirect costs, we talked about increasing the de minimis rate from 10% to 15%. Again, this is an up to. You can elect if you want to take the de minimis rate. You are not obligated to. It is an election that you can take. The reason the federal government increased it was just a more realistic recovery of indirect costs. Personally, I'm not sure 5% gets you a whole lot more. But again, it's just a requirement that you have the option to take it. Pass-through entities must accept all federally negotiated rates for subrecipients. So if you are a subrecipient of another organization and you choose to take the indirect cost rate, your pass-through entity has to abide by that and honor that rate that you elect, whether it's 8, 10, 12, 15%. They have to give it out and honor it as a use of your federal dollars. And then if you do ever have a dispute, you can contact the OMB and that they can look into it with you in order to make sure that you're getting the rate that you're entitled to. So again, it's up to you if you want to use it, but it is there and it is a higher rate available to you going forward with these new grants only. So this is only the grants that are getting issued to you after, again, as Mark has mentioned, that October 2024 period. So you can't go back, but you can use it starting to go forward. Equipment definition. Equipment has changed the definition a little bit. So again, we talked about the capitalization requirement. It does include capital assets, computing devices, general purpose, all sorts of various equipment. So again, you can increase your capitalization to $10,000, but as I had mentioned, make sure that this is a decision that makes the most sense for your organization based on how capitalizing items does potentially impact any rates that you have to go through on an annual basis.
I've had a few clients ask me what exactly is meant by this capitalization change. And of course, it refers to whether or not the dollar threshold of either expensing the cost through your income statement or capitalizing it as in recording it as an asset. And of course, calculating and tracking depreciation over the life of that asset. This is another example where they're in these changes to the uniform guidance, they're trying to ease the administrative burden of organizations where with the threshold increasing, a lot more can be simply expensed out through the income statement, and basically that's the end of its path there. However, with items being capitalized and depreciated, there's also further compliance requirements that also need to be addressed. Specifically for any capitalized assets acquired with federal funds, the auditor from time to time will have to look at further compliance requirements related to that. Are you doing a tri-annual inventory of the depreciable capitalized assets that were acquired with federal funding? What kind of state are they being maintained in? Are they being stored in a secure manner? Things like that. So if more can be written off through the income statement, it shows a lessening of the administrative burden.
Good point, Mark. So again, more looking at what is determined to be whether somebody is a subrecipient or a contractor. I know internally this conversation comes up quite often with clients and not knowing whether or not they're viewed as a contractor or a subrecipient. I highly support Mark in his comment of ask your funder if it's not obvious from the language within your grant document. But the big deal is that essentially the pass-through entity is the one who should be responsible for making the determination of what the subrecipient is actually being viewed as, whether they are a contractor or a subrecipient. So if you're a subrecipient, you are subject to all of these same requirements as if you had received the federal dollars yourself directly. And the person, the pass-through entity that gave you the funds is responsible then for subrecipient monitoring of your actions as being a subrecipient. So that means as a subrecipient, you're making eligibility determinations, you're making these capitalizations decisions, as Mark had talked about, and subject to those inventory processes. But if you're a contractor, then you're just performing a very specific responsibility under the grant for the pass-through entity, and you're meeting their specific requirements, and they're assuming the responsibility of the work that you're doing. So always happy to talk through, always encourage you to talk through with either the funder or your auditor, looking at those grant documents and just making sure, because as Mark has pointed out, this language should be very clear in your grant document and would then impact the CEFA schedule and how you put that together. So you don't necessarily want to miss a grant document that is actually considering you as a subrecipient as opposed to you being viewed as a contractor. So this is a very muddy area. They're trying to get it a little bit more clear by putting the onus on that pass-through entity to make that determination and make sure that it's clearly communicated. Mark, do you have any comments to that?
I like to tell the story about medical transportation. So if Karen is a funding source and I provide medical transportation, I drive Farmer Fred to his doctor's appointment. If Karen is the gatekeeper and assesses, Farmer Fred's situation and goes through it, and it tells me and hires me and pays me a fee, okay, I've determined that Farmer Fred can participate in this program. You simply go pick him up and I'll pay you. I'm not a subrecipient. I'm just a contractor. I'm no different than the plumber that fixes the faucet, collects a fee, and passes go. The difference being that I don't need to put that funding on my CEFA and thus not be subject to any potential compliance audit required. However, if Karen throws a big pot of money at me and says, you're responsible for administering this program, it's on you to interview Farmer Fred and see if he is eligible for the program, either through a medical diagnosis or through his income levels. And based on the poverty level, if I'm the one to determine eligibility, then I would be a subrecipient and I would have to report that funding on the CEFA. Just want to pause here. We have a question in the chat about the rates negotiated. I believe they can be renegotiated upon the start of the new awards for 10/1/24 going forward with the changes and the increase in threshold. So as you have new awards, reach out to the funding source and you should be able to renegotiate the rate.
That was a great story. Good explanation, and hopefully Farmer Fred got the services that he needed to receive. So again, the other responsibility, and this would kind of be the same, honestly, it should be anyways, regardless if they are a contractor or actually determined to be a subrecipient, is the pass-through entity's requirement to ensure that that recipient, one way or the other, is not on sam.gov as an excluded entity, so that they haven't been suspended, debarred, or otherwise excluded from receiving federal funds. So this should be being done for anybody who receives more than $25,000 of these federal grants. So whether it's a good or a service, that has not changed. But I think there was some question out there of whether or not pass-through entities were required to see if their subrecipients, who they are electing to share responsibility with, also needed to go through this process. And yes, the pass-through entity is responsible and should verify that they are not on this excluded list to participate in receiving the federal dollars. Looking at required certifications. So again, it's here, I had mentioned it earlier, applies to all tiers of subrecipients. So there are requirements for the pass-through entity and requesting payment to certify the use of the federal dollars, and that requires to all tiers of subrecipients. So as Mark and I have made an example, it starts at the federal level, it goes through New York State. From New York State, it could go to your local county government, and then from your local county government, it comes down to your organization. You would theoretically be the fourth tier in that funding stream, and all of you the whole way through would be required to be certifying how the funds are being expended and applying for various funds. So everybody has a responsibility in the process, whereas before it typically stopped at the pass-through entity. It's now making sure that it's going all the way down. So if you receive new grants starting after October 2024, you may be asked to apply or certify your responsibility of complying with the grant. And then this last one is very specific. Oh, sorry, Mark, to the Institutes of Higher Education. Previously, they were required to submit this disclosure statement that has been removed. So I know a lot of higher education schools would always have to do this. You typically receive more than 50 million, depending on the amount of student financial assistance that is provided. So this disclosure statement does go away starting October 2024. So that's another great burden off of the higher education recipients. So with that, we'll go into polling 3. Do you think your organization will have to revise policies or internal controls as a result of these changes? Yes, no, or unsure? And I see a question here. Do pass-through entities need to request a UEI from the subrecipient to verify eligibility? And yes, the answer is yes. Anybody who is receiving federal funds is required to have a UEI, as you are essentially stating that you are understanding the responsibilities of receiving federal dollars, and you may then be subject to federal audit uniform guidance reporting as well. And as Mark mentioned, when you do your final report, you're required to have that UEI. Are we going to request it or discuss advances? As far as we know, there aren't really any significant changes related to advances. If you would like to email me or Mark directly, if you have a specific question, we're more than happy to maybe answer that for you. But no, there weren't, as far as I know, Mark, I don't think you are any specific changes related to advances. Those typically are coming from New York State.
Right. I guess, no, I'm not aware of any specific changes with it, but it's always a good opportunity if you have such a program to revisit compliance requirement C, cash management within the compliance supplement, as a good refresher for the various compliance requirements that are required to be addressed that are particularly sensitive to advance-based funded programs.
Great point, Mark. So with that, I'll turn it over to you to kind of go through our last few minutes here on auditor changes.
Okay, so go ahead and put on my auditor cap here and let you know some things that you're going to see from the auditee side of the table. So as we've said several times, of course, the single audit threshold is increasing from $750,000 to $1 million. The whole building or CFA, and looking at the total to determine whether or not you need a federal compliance single audit engagement. One thing of note, the major program determination threshold has also increased from $750,000 to $1 million. So as the auditor, in assessing the federal compliance aspect of your organization, once you prepare that CFA, you hand it to me to review, assess, and ultimately perform the compliance audit over it. The first thing I'm going to do as the auditor is classify your programs into 2 types, type A's or type B's. And what we're saying here, the distinction between the two is the dollar threshold that has now increased to $1 million. So what that means, the implication for you on the client side is fewer programs would ideally be type A programs. The implication being that all type A programs are required to be audited at least once in a 3-year cycle. So if you provide me with the CFA and you have a type A program and it wasn't tested 2 years ago and it wasn't tested last year, it's a pretty good bet that the auditor is going to be asking about that program and identifying it as a major program and assessing the compliance requirements. So be prepared for that. As far as standards and scope of the audit, there was further clarification that the CFA can be prepared in accordance with US GAAP, in other words, accrual accounting, or for a special purpose framework. Related to audit findings, question cost consists of an expenditure that was deemed to be non-compliance. There are no question costs solely because of deficiencies in internal control or non-compliance with the reporting type of requirement. And that's kind of illustrated in that kind of circle Venn diagram that you see here on the slide. Just because there is an internal control finding does not mean that there's a compliance finding. The best way to think of that is horses in a barn. Just because you left the barn door wide open, it doesn't necessarily mean the horses got out and are running amok. So it's still possible to be accidentally compliant, we say, within our office. However, if you're driving up to the ranch and you haven't even gotten there yet and you see the horses running along the horizon, it's a pretty good bet that the barn door is wide open when you get there. In other words, a compliance finding generally means that there's been some kind of issue in the internal controls that facilitated that non-compliance from happening. Additionally, there's clarification that question cost means a question cost identified by the auditor. Likely question costs, as Karen was saying, means that the auditor's best estimate of total question costs, not just the known question costs. Likely question costs are developed by doing an extrapolation, those proportion math exercises we used to do in grade school, where we have a sample, we come up with an error rate based on our findings, and we attribute that to the population as a whole. And so the question is, that extrapolated impact on the population, is that more or less than $25,000? If it's more, then the known question cost would need to be reported within the deliverables. Just a few quick definitions here. A clarification, the meaning of question costs. It's in the auditor's judgment, if is it non-compliant or suspected of non-compliant within the federal statutes, regulations, or in the terms of the actual contract agreement you have. At the time of the audit, if it lacked adequate documentation to support compliance, if they make a selection and the audit evidence is not available, and if it appeared unreasonable and did not reflect the actions of a prudent person with taking the circumstances. That sounds like a legal buzzword, the actions of a reasonable purpose. If you're a Law and Order fan like I am, you hear that quite a bit. So it's in the same spirit here with respect to federal compliance. Further definitions within question costs. There are no question costs. I know we just talked about this because of deficiencies in internal control. Again, just because you left the barn door open, it doesn't mean the horses ran out. And non-compliance with the reporting type of compliance requirement. So I'm going to give the ball back to Karen and providing some guidance in your actual implementation of these changes at your respective organizations.
Thanks, Mark. So it is interesting. The last poll was that question exactly was, do you think your organization will have to revise its policies or internal controls? And it's actually very split. So 37% said yes, 25% said no, and 38% are unsure. So I think this is a great opportunity. As Mark said, the compliance supplement does not come out until May. And again, it is only starting those changes that we've all discussed are specific to those grants that are issued after October 2024. So there will be some time for you to kind of evaluate, okay, what are all these changes? Are they really changing my audit requirements? So say you get a grant document in November or February, read through it. And if it's a continuing one, maybe compare it to the prior one and see, oh my gosh, this grantor is now all of a sudden asking me to do all these additional things. I don't have these in place, or I don't know how to respond to these inquiries that they're now giving me as part of this notice of grant award. So there's going to be some time, but I would anticipate that most people will probably have to make some adjustments, whether it's to capitalization or looking at how you could determine applying indirect cost rates. There was that question about the negotiated rate, and maybe you need to go back and renegotiate with new grants because there's opportunity to increase that and get more funding specifically to support those indirect costs. And then making sure that you're documenting these changes. So these are things that you should have conversation across various levels, again, across also the various programs. So while many of you on the call may be the ones that sit within the finance or accounting department, when you read through these grant documents, make sure that you're getting those program staff involved. Ultimately, in many cases, those are the individuals who are actually interacting, making eligibility determinations, making budget determinations or decisions on how they're spending funds to support a program. So there are things that could change and may change that you'll want to make sure that you're having those open conversations and dialogue. And then, as I mentioned, this dreaded word, cybersecurity, we all know that it is just increasing. It's becoming a hotter and hotter topic. The breaches don't stop. They're not going to. So just making sure that you are evaluating kind of your posture related to access and protecting various data. If you're in, health and human services, you have a lot of data. If you're in schools, so as you're determining eligibility, as Mark said, for, say, Farmer Fred, you may be getting his, personal information related to his income, the number of people in his household, things like that. That needs to make sure that it's being protected and it's not just written on a piece of paper and put into, a filing cabinet. What are you doing electronically and physically to protect that data from being accessed? So that I would foresee is going to be potentially the biggest lift. We are out of time. There is in the presentation that will be again provided to you, as Mark said, in roughly 2 weeks, along with your CPE certification. So you'll have access to these links. There is the last polling question. How do you feel about the latest updates with respect to uniform guidance? This will be great for providing efficiencies, may pose a few challenges, or unsure. So we encourage everyone to go in, click on that. And as Mark mentioned, there is the opportunity to register for some more trainings in various sessions coming up. Some of them are very robust if you're in Health and Human Services. I know there's one coming up on Friday. But if you ever have any inquiries, as I mentioned, don't hesitate to reach out to Mark, or your auditor, or any of your other personal contacts here. We're always happy to have conversation and provide any guidance and assistance to the implementation or questions that you have. So overall, we thank everyone for being with us today. We hope you have a great rest of your week, and we look forward to having you join us at future sessions. Make sure you click the checkout button on your conferences IO. Did I forget anything, Mark?
No, thank you for reminding me because I almost forgot to check out, so I appreciate it.
Thank you, everyone. Have a great day.
Take care, everybody. Have a good week.